I was looking at recent drawdowns from 52-week highs, but Tesla was one of those companies that they didn't top last year or 2020. It was like 2020, 2021 there that we're seeing those highs. And so they are significantly still off those highs, but they are in an uptrend right now. They're at the bottom edge of this little channel that's forming. And if growth stocks can succeed today, if they can surge today with surging interest rates, I would say, well, perfect environment for Tesla to surge as well. We got to move on.
Since its earnings announcement on July 19th, it's been a completely different story for Tesla. Shares of the EV company were down 21% as of the 16th of August. Tesla shares have lost 15% this month and have been on a mostly downward trajectory after the company's second quarter earnings in mid-July. So maybe investors aren't that happy. Tesla sales were up 47% year over year in the second quarter, with vehicle deliveries increasing 83%. This is a tremendous growth, and maybe not everybody agrees with this, but we certainly do. In today's video, we're going to explore the current state of Tesla and its stock, and what both the bears and the bulls are thinking right now.
Shares of Tesla, those rising, it's up almost 7%, just at 7% on the nose right now. It has its sights set on ending a 6-day losing streak. This comes as Baird analyst Ben Kallo highlighted some positive developments ahead of the EV maker in the second half of the year. That includes the launch of the Cybertruck. We've been talking about that. Continued growth in the energy business and expanding into new markets. So it's definitely been helpful for the share price today. It's the best ideas list, right, Jared?
Yeah. Well, let's take a look at the Wi-Fi Interactive. I got some charting to do on this stock. First of all, this is a heat map of the entire sector today. So EVs are doing well. A couple like Volkswagen not performing well, but let's take a look at over the last month. You can see they have been struggling. Most of these names have been struggling with the exception of the Chinese automakers and Toyota. But we're talking about Tesla. Let's chart Tesla here. This is a stock that has come off of its highs. And in fact, I was doing an analysis on Megacaps Friday because I had nothing else to do. And I was looking at recent drawdowns from 52-week highs, but Tesla was one of those companies that they didn't top last year or 2020. It was like 2020, 2021 there that we're seeing those highs. And so they are significantly still off those highs, but they are in an uptrend right now. They're at the bottom edge of this little channel that's forming. And if growth stocks can succeed today, if they can surge today with surging interest rates, I would say, well, perfect environment for Tesla to surge as well. We got to move on.
Only a few investors look at Tesla stock from a long-term perspective. The car company's made a number of announcements in the past few months, although not everyone is moved by them. Making matters worse is Tesla's recent announcement to introduce cheaper versions of its higher-end S and X models. Customers can buy shorter-range versions of these cars for $10,000 less than the more expensive versions. Moreover, the business is also in an intense price war in China. Hey guys, welcome back to Tesla Tomorrow. Long-term believers in Tesla stock are less concerned with near-term margins and their trends too, and more focused on Tesla's potential to generate copious amounts of profit and cash flow in the future. Think about it, this company is working on AI and a supercomputer called Dojo, and this can bring about FSD vehicles by improving its ability to train neural nets to bolster the software's decision-making in various driving environments. What many don't realize is that this could completely change the financial picture for Tesla. Before we carry on, if you like this type of content, hit that like button, subscribe and turn on post notifications to keep up to date on everything going on with Tesla. A recent article just revealed 5 reasons why, according to them, Tesla will never make money. The article highlighted 5 different points on why the whole idea of Tesla making a lot of money could actually be an exaggeration. It noted that while Tesla's sporty two-door $100,000 electric vehicle can accelerate to 60 miles per hour in 3.9 seconds, the automaker has only sold 1,063 of them, and the much-anticipated family-friendly sedan model will not even be in production for a while yet. This actually had further implications. The article further noted that Tesla has suffered net losses every quarter since it introduced its first electric car to the market in 2008, and the company is heavily dependent on government funding. While these are probably some analysts' opinions about Tesla, we won't completely take them as facts, and here's why. Tesla stock rose more than 5% after Baird analyst Ben Kallo highlighted some positive developments ahead of the EV maker in the second half of the year. including the launch of the Cybertruck. Bet Callow said price cuts and their impact on margins would drive the narrative for the electric vehicle maker in the second half. He noted potential upcoming catalysts for the stock included the Cybertruck launch, a wider scale adoption of FSD, continued growth in the energy business, expansion into new markets, and a potential AI day, among others. There is something that Tesla is doing differently. For instance, car buyers have different options, but Tesla and Chinese automakers continue to find success in electric vehicles. And these old guard automakers could force buyers to compromise. Mainstay automakers from places like Detroit and Germany have long prided themselves on variety, giving their customers a myriad of choices, not only in terms of vehicle type, but also trim, color, features, and car options. Meanwhile, car shoppers buying from Tesla have had fewer configurations to choose from. Tesla has pared down the build options to give customers a fewer number of car options to choose from, including colors, interior choices, limited trims, and many other features that simply come as standard. Even the budding Chinese EV makers operate similarly, with much success. The issue is that more options from a car company means more complex assembly processes. If an automaker has 100 customer orders of the same vehicle model, but each one is different in terms of variations, then it's more challenging and time-consuming to put them together. And so the lack of build complexity has been an advantage for Tesla, startup EV makers, and its Chinese competition. Tesla is hitting record high monthly production and delivery targets, and it's long been the EV market leader. While its profitability and market share may be waning as the price war and increasing competition surface, Tesla still has the lead. As for the Chinese companies, their model is clearly working too. These firms made major gains on non-Chinese automakers in the last year and continue to have an upward trajectory. Analysts have cited that global regulations on emissions and mileage are driving the growth of EVs, and while competition is rising, it expects to continue to have a significant presence in global markets. The passage of the IRA in August 2022 has served as a catalyst for rapid EV-related investments. Since the US government signed the IRA into law, manufacturers have made more than $92.4 billion on concrete investments in EV and EV battery factories in the US. A recent market research also noted that the rapid growth of US production capacity over the last 6 months has been pretty vast. The research claims that by 2026, the US EV manufacturing facilities will be able to make over 4.7 million new passenger EVs annually, representing 36% of all new vehicles sold last year. And by 2027, US facilities alone will be able to produce enough batteries to supply 12.2 million new passenger EVs every year, representing 95% of new vehicles sold last year. While the bears like to compare Tesla to other automakers, we think this is absolutely wrong. For instance, Tesla recently expanded installations of its V4 supercharging dispensers to at least 2 additional countries, particularly the United Kingdom and Norway. Several V4 stations have been built so far in Europe, but this is just the beginning. The V4 charging dispensers were installed at Tottenham Service Centre in the UK, and photos of the site reveal how the dispensers look inside, with much empty space as Tesla utilized everything available within the tall, boxy shape. But what do you think? Let us know down below. And don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.